Today, our session 2, part 4, April 19, 2026. So we are discussing the UAE Corporate Tax, in which we understand who will pay the corporate tax. Then we said it will be taxed, okay, and when it will be taxed or it will be paid. So the tax means the which income will be taxed. So this is what we are understanding. Corporate tax, who will pay, means the person. Then we said what will be taxed. We are saying the income, which income will be taxed when it's the tax period. So this is our learning in the first session. So now we are diving into detail of each area and we will learn further. So we were continuing the exempt income, the last point. So this is the exempt income, where we understand the four main exempt income that will be deductible under the corporate tax computation. So where we said the local dividend, then we said the participating interest, we understand in detail. Then we said the foreign PE. Okay. So another point, we said the international transportation. So these 4 points, the exempt income, we understand. So if you look here or at the top, the 8 adjustment. Okay, the 8 adjustment, because when we are going in the comprehensive, the each topic wise, so we are covering the 8 adjustment. Under the 8 adjustment, each adjustment have the further subsection. So here is the one of the example for understanding how we are learning and what are the connection or the tree we are making to improve our understanding. So on this point, anybody have any question? Any clarification is required? So up to here, we discussed in detail and we covered each area in the detail. So let's understand the one minute, please. Okay, so now in the return, in the corporate tax return filing, here we are in the corporate tax return filing. So where the exempt income will be relevant for us. If we are studying the exempt income, so how we will treat in the corporate tax return filing? It will be appearing under the 5th step, under the accounting and the adjustment. So under accounting and adjustment, there will be one window. If we have the exempt income, so this will be open. Under that window or under that slide or under that computation working, so what we're going to do that? We understand the overview in the previous session. Now we are understanding why we need to understand or why we have to learn the exempt income. Let's see. So this is the exact corporate tax return. We extract from there and prepare the slides for the training purpose. So when this question will be appearing in the corporate tax return. And meanwhile, I shared one Excel file also, and I shared the previously, I believe, the PDF also, the same PDF converted into Excel. So I appreciate if you open that Excel file and keep marking that Excel file, in which you understand on how many topics we covered and how many still pending. And continually, we are working on one by one on each section, but in a structured way. That structured way will be continuing as we design this course. But of course, we are covering all the elements. So the exempt income, the first question is coming. Okay, the taxable person received any dividend, profit distribution. The important part, resident person. The important part is a resident person. If anybody would like to clarify what will be the with our learning in the previous session. What would be our learning in the previous session? Regarding the exempt income, in the first session, we discussed. So anybody would like to answer on that? I appreciate if you quickly reply over there. Yes, Abdullah, you raise the hand, so you're still there? Because if you raise the hand, I will open the mic for you. If anybody else. Anybody would like to clarify our last session learning regarding the exempt income, where we understand regarding the dividend, profit distribution, and the resident. So this is our last slide where we understand the exempt income. This is our exempt income. It will be exempt under which scenario? When we are receiving the local dividend from UAE company. When we are receiving the local dividend from the UAE company, it will be exempt.
Yes, sir.
What does mean the UAE company? Mean the resident. Like the company we are working is registered in the UAE, is operating in the UAE, is doing the business in the UAE. So that's considered as a resident. So we said if this is the condition, then other condition is no need to check. What is the other condition? In case of the non-resident. In case of non-residence condition, that will come under participating interest. That is the PI. So if we're looking for here, non-resident. So here we are considering the UAE resident, if falling under that. If the non-resident, then we are coming to PI condition. If we're coming to PI condition, then we have to see the other applicable condition. Non-resident. Are you familiar with the resident concept and non-resident concept? Because this is the very important when we are learning over here. So in the first part here, what our learning in the tax return, taxable income. If the taxable income, first dimension, the taxable person that we learned in the first session. Then the second is the dividend and the profit received from resident person. Now, what is the taxable person? Taxable person means the company A, B, C, or let's say PTG consultant is a taxable person or is a resident person. So let's understand the PTG consultant. First, we have to understand as a taxable person. Okay, let's understand. I'm writing here taxable person. So then we are saying is a resident or non-resident. So let's assume the PTG consultant did the investment in another company. Any company we can take the like this. We can say the Siemens. We can say the ABB, or we can say the any the mark properties or IMAR properties as a company, as a juridical person, if we did the investment over here, over here, so that if we are receiving the dividend, what is that? What we will receive if we invest as a shares. What we will expect from them as a dividend or profit distribution from whom? The other companies like the IMAR Properties also is a UAE resident company. If it's a UAE resident company, so we are getting the dividend. We are getting the dividend from the UAE resident company. What is that? Or the profit. So then the income coming from the UAE company, UAE resident company, will be treated as exempt or no? It will be exempt or no?
It will be exempted.
This income we receive from the UAE company is exempt or no? Anybody would like to answer on that? Abdullah, you would like to say something?
Yes, sir. The dividend we received from a company which is incorporated, registered inside UAE.
You
If we
have any
receive the
question, please? Your mic is open now.
yes, sir. I'm speaking. Okay.
Okay, let's come back to our topic. So here we understand that the UAE company did the investment in other company, is receiving the dividend, so it will be treated as a taxable person receive dividend and profit from the resident company. If we're saying yes or no, the next window or the return will be work in the same fashion. If we're saying no, so the below window will not open. So this window, this activity will not open. So return will be go to the next step. If we're saying yes, taxable person receive the dividend and the profit distribution, then he will ask, okay, give us the income, how much you taken, how much you receive from the UAE company. Why they are receiving? Because this would be under exempt income. We are discussing the deductible. So how the deductible? Because from your income, the total income included the exempt income. If you are adding over here, so if let's say your income is a 1,000 and exempt income is a 200, so the 200 what you are putting here, it will be deduct from the total income. So your taxable income will be now 800. So this is the concept of the exempt income. Any question over here? Okay, so the same calculation we already taken from where we'll take this figure? From our audited financial. This figure we will take from our audited financial. Okay, so now the next point, the exempt income. So what is our understanding over here? We said the income we receive from the local, that is the first point. What is the second point? The participating interest. So next, the point is that whether we receive the income or generate the income as a dividend or the profit distribution, that company falling under PI condition. If the PI condition, so then we will, if we say no, so it will be, this further window will not open. While opting for the no, below will not applicable. But when we say yes, then the return will open all this. Okay, so here, the another, if we're looking for the taxable person, derived income or losses. Here, another important part, income, they are asked below. If we like to see income, they will ask separately. Losses, they will ask separately. What they mean, they will track separately. The income derived from the participating interest, let's say the 1,000, or the losses derived from the participating interest, we have to write separately. And in our accounting system, we also have to keep separate chart of account for both of them. Why? Because the same figure we have to report over there. Because the same company, they have investment in 5. 1, 2, 3, 4, 5. So maybe this 3 is giving the income and this 2 is giving the loss. From this 2 is coming the loss, so we have to track separately the losses. It's corporate tax return is not asking the net of figure. They are saying, okay, in during the period, how much the income you generated, right over here. How much the losses, right over here. System automatically will calculate. So now the another point that is highlighting over here, because as we mentioned, the PI participating interests, here the PI participating interests have certain associated condition. If we meet the condition, then you will get the exemption. One of that, you must keep your investment or in the PI 2 years. If we did the one, if we come back and see over here, so one condition is written 5% or more. The shareholding in that PI are the 4 million, one of them. Then in case of dividend, they said, okay, if you are getting the dividend, then your investment period or holding period of the investment must be more than 2 years. So if we purchase is the first tax period, let's say the first tax period is 2024, the first two condition, what is that two condition? We are meeting the 5% or the 4 million. But the 2-year condition is not met. 2-year condition because, and we are receiving the dividend after the year end, but in the first tax period, this condition is not met. So what they said, intent to hold for the 2 years. If we have the intent as a investment for keep for 2 years, they said, okay, good to go. You can add here your income and losses and take the exemption. Now, the next year, here, if we add over here the 2025, so we have to go back and check whether this share still with us or no. This share still with us or no. If we sold these shares less than 2 years, so the income here we put as an exempt, so it would be chargeable. If we are adding the income over here, that first year was the deductible, reduce our taxable income. Because we sold the share before 2 years, so now we are adding the same income. So we are saying crystallize. Crystallize means the last year what we taken the exemption now is taxable. So here we added over the taxable we have to keep track all this exempt income and meeting the condition in the following year or not. The same way the losses also, if same condition, if it's not met, the last year we took the advantage of the losses, and here we have to add the losses also. So any point up to here? Any question? Do you have any question up to here, or will we continue the next slide? Okay, let's move to the next slide. Regarding the exempt income, hope we understand this part.